Dun-dun-dun-dun-dun. Ba-na-na-na-na-na. I ain't scared of no ghost. Or, I ain't scared of no SEC, apparently. ICOs, initial coin offerings, cryptocurrency, on track to raise $1.7 billion as firms ignore Securities and Exchange Commission's tokens or securities ruling. Again, certain tokens, that is. Zero Hedge covering this. 2 weeks ago, the SEC declared that the virtual tokens issued during an initial coin offering, an increasingly popular funding mechanism for blockchain startups, are considered securities and therefore subject to a litany of regulatory strictures, including the need to register any pending offerings with the agency. The Securities and Exchange Commission's decree was expected to, slow the pace of new ICOs as startups scrambled to hire legal counsel and figure out how exactly to comply with the new rules, as Zero Hedge reported. However, blockchain analysts reasoned that the agency's ruling was a good thing for the market's long-term health and that the increased scrutiny would help confer more legitimacy on the shady ICO market, which is fraught with hacking attacks and scams. SEC oversight benefits entrepreneurs by encouraging more risk-averse investors to buy their tokens. It helps investors by weeding out fraud. However, it seems we underestimated the market's willingness to simply ignore the whims of U.S. regulators. Despite being the world's largest economy and one of the largest markets for crypto assets, the New York Times is reporting that the cautionary words of American regulators have done little to chill a red-hot market for new virtual currencies. Quote, even after the commission said it was looking closely at projects that may violate its rules, programmers are still embarking on new offerings at a torrid pace. Most of the offerings have little legal oversight, and some appear to conflict with the commission's basic advice. The broader detail and the silences in the report should give many people pause, and that doesn't seem to have happened yet, said Emma Channing, the general counsel at the Argonne Group, which helps projects in the industry raise funds. I don't understand why everyone isn't as concerned as I am. Well, I can tell you why, Miss Emma Channing. And it sounds like this. I won. Give me my money. You what? I lost. It's called, there's so much money being made on cryptos. People are jumping in. That's what it is, Miss Emma. They're not getting these kind of returns in the stock market. You can't find these kind of returns anywhere. Again, look at the prices of Bitcoin, Ethereum, etc. again, which I will open up my page to take a peek at. $297. We are at $300 again. Ethereum, Bitcoin, $34.09, which I guess I could kind of peek and see if I can see what the all-time high was now. It looks like it was just under 30. It was 34.81-ish. 34.81, nearly $3,500 for Bitcoin. Ethereum, on the other hand, did it break $300 today? No, it is about to right now as I'm speaking. $298.79. So, anyways, what was one thing your best friend Jason M4 told you when all the ICOs were happening? Guys, expect to see Ethereum get monkey hammered. Low 100s are very possible. It happened. I said, because there was a lot of concern, guys, just calm down. I know you're nervous. Don't sweat it. It'll be back to $300 before you know it. How long ago was that? That was not very long ago, right? Let's see. We had the low roughly on July 16th. It looks like at $136 Ethereum. It's now $300, more than double. In how many days? Well, roughly, we'll call it 20 days or so. Cliff High told us you're going to see people playing that market alone. Just a bunch of ICOs come out, sell off right now on my Ethereum. They come out, the ICOs gobble up a bunch of people's Ethereum, sell them off on the market, pushes the price down. Then those people go and buy it back up. The people who sold their Ethereum buy it back up and then ride it up to the next level. He said people are going to make fortunes doing that, just doing that. Don't even have to mess with ICOs. But even that doesn't compare to how some of these ICOs have performed. And speaking of cryptos, I've been telling you, hey, there's this one we're waiting on. Man, if this event happens this month, man, oh boy, can't wait to tell my subscribers what it is and have us all jump in on it. There's actually the potential of a different coin, like I said, which is why I did not mention the coin. There's another coin that might be fitting the bill as well as the first coin we thought. However, we'll just have to wait and see. But now you know why I didn't say what it might have been. Because it might be a second one. We now have our eyes on two different coins. Which, by the way, if we see the event, it could be a third coin we weren't even looking at. Which is why I'm making you wait before I tell you which one it is. I'm saving you from yourself. Okay? So anyways, back to the article. The broader detail and the site. Oh, I already read that part, I think. Yep. Since the guidance was released on July 25th, 46 new coin offerings have been announced, and an additional 204 are moving toward fundraising, according to data from tokendata.io. Despite the SEC's ruling, the ICO market remains on track to surpass all historic VC investment in the blockchain space by year end, which stands at $1.7 billion since 2010, according to a team of analysts at PitchBook. In the 8 years since the debut of Bitcoin, only Coinbase, Circle, and 21 have raised more than $100 million. July was the best month for ICOs to date, according to the New York Times, which we already talked about. I already told you this. ICO mania happened in July. We prepared for it, mentioned it, happened, great. So now what? Now it will slow down, which is why you're seeing the cryptos recovering nicely. In my opinion, that's the only reason right now. Let me back up. That's not the only. But if there's 3 or 4 reasons, it's number one. It's the number one reason the cryptos have recovered. Yes, some other ICOs have come out, but it's like, well, this coin, that coin, whatever. There haven't been some good ones that everyone wanted to pounce on. We all got cleaned out, so to speak, in July. We blew our amount on them, and now we're waiting. And of course, if another one comes up that's really, really, really good, you got to determine, do I sell off and some of these other ones to put into that one, or do I just come up with some more cash and hold on to those ones and then get into this one? So anyways, July was the biggest month for coin offerings, with 34 projects raising $665 million. Tokendata.io data shows, or twice as much money as was raised in the first 5 months of the year combined. However, data from Goldman Sachs put the total for July closer to $300 million, which would make July the second best month after June. However, ICOs have surpassed angel and seed stage funding for all internet companies since the beginning of the summer. The decentralized nature of digital currencies allows blockchain companies to, using PitchBook's phrasing, maximally leverage regulatory arbitrage. Why should startups with a hot ICO waste money on lawyers when they can just move to Switzerland, right? As the New York Times explains, companies can try to avoid the SEC by blocking U.S. investors from participating in an ICO. Quote, other projects have tried to work around regulators by prohibiting American investors from buying their coins, which they have done by barring anyone who tries to buy the coins from an internet address associated with the United States. But the relative ease with which U.S. investors can circumvent these limitations still risks angering the agency, which could go after a company for non-compliance, even if it's based in a foreign country, if U.S. investors are found to have participated. Several lawyers said that the commission is unlikely to care about the steps taken to keep out American investors if Americans still end up buying the coins. Just blocking IP addresses is irrelevant, said Patrick Merck, a partner of the law firm Cooley, referring to Internet Protocol. There's only one thing that is relevant, and that is whether a U.S. investor bought in your sale. While Switzerland's regulatory climate remains accommodative for blockchain companies, it recently opened the door to the crypto asset management industry by allowing a local private bank to begin handling digital currencies. Singapore, another crypto haven, has said it would adopt many of the same restrictions imposed by the SEC, according to the New York Times. Ultimately, the real reason so many firms have hesitated to comply with the SEC is because they view compliance as a greater business risk than non-compliance. To use a metaphor, nobody wants to be the first person to jump into murky water. There could be sharks or other dangers lurking beneath the surface. Mr. Merck said that even teams that do make an effort to comply with the regulators are going to be in treacherous waters because of the lack of clear definitions in law regarding virtual currencies. There is still open questions after the SEC report, he said. There's uncertainty and risk in the space, even for people who are taking a professional approach to it. But after the waters have been tested, companies will have a clearer picture of the risks involved and perhaps be more willing to comply. Read the full pitch book report on ICOs below. Again, this is from Zero Hedge. I will, of course, link this article for you if you want to read that whole PDF or whatever it is they link down there. So yeah, apparently the ICOs, everyone wants in, and they ain't stopping at nothing. Take care.